Good morning, everybody. Welcome to the HB IPO Watch 2020 mid-year report. Now, those of you who've attended our launches before, obviously you'd notice this format's a little bit different to previous years. Because of the webinar format, the presentation will be a little bit longer than normal and a little bit more detailed, but we'll certainly endeavour to leave enough time for some questions as we get to the end of the presentation. Now, just a few basics on the report, just to get started. We are going to go through, as I mentioned, a few facts and figures today. And there's quite a bit of detail on the slides, but just to let you know, obviously all the details will be in the report. If you need any further analysis, please let us know and we'll endeavour to get that to you. And also, finally, we're going to be talking a lot about the phrase small caps, and there's varying definitions of small cap, but in the context of this report, we'll be talking about those companies with a market capitalisation on listing of $100 million or less. So we'll move on to the first slide. And this is a bit of an overview, really, of what's just happened in the last 6 months of 2020, but also historically over the last 4.5 years. And I hope everyone can see this, but the bar graphs there represent the volume of new IPOs, and they're split into larger caps, which is the lighter colour there, and small caps. And then we also have the line graphs there, which is the total funds raised. So the yellow line there is large caps, and the lower line, which is almost the horizontal axis, is basically small cap fundraising. So as you can see there, in certainly 2020, it's really fallen quite dramatically from what we've seen in previous periods. The number of IPOs, in fact, in the first 6 months of 2020 has fallen considerably in comparison to previous years. Obviously, as we know, that's against the backdrop of COVID-19 and what's been a very volatile period in the wider markets. So we only saw 12 listings so far this year. And as you can see there from the historical context on the graph, that's in marked contrast to what we've seen in previous years. So if we go back to the same period last year, we had roughly double the amount of listings. We had 23 last year. And in fact, if we go back over a longer time period, the 5-year average is sitting around 34 listings. So 2020 so far, volume-wise, we're roughly seeing a third of the historical average that we've seen previously. Now, unsurprisingly, because we've had that fall in volume, we've also had a significant reduction in the amounts raised from new listings. So far in 2020, only $132 million has been raised, which is, I really can't remember the last time the funds raised in the IPO market was so low. And in fact, as you can see there, the line graphs there for the amounts raised almost disappear in 2020. So just comparing that 132 to what we've seen historically, this time last year, the funds raised were 823 million, and that was already a fairly soft year in 2019. If we go back to the previous year, there's $2.5 billion raised. So very, very quiet so far this year. Obviously, those funds raised very highly sensitive to the number of large caps. We only had one large cap this year, which was a company called Atomo Diagnostics. So as you can see on the graph there, the second quarter, or the June quarter, is very much out of line with what we've seen in previous periods. It was really evident during the second half of the period that COVID was having a very significant impact on the market. Now, we saw some very significant falls in the ASX. At one point, it was down by percentage terms somewhere in the 30s from the peak at the end of February. Now, the markets have recovered somewhat, but there's no doubt there's quite a lot of risk and volatility present. That's not generally a good environment for IPOs. So that's one of the reasons, obviously, we've seen that reduced volume. And not just reduced volume, but we've seen a lot of listings withdrawn as well. So those listings we did have here, as you can see, are mainly from small cap sector. Now, the number of small caps this year compared to last year is actually quite similar, but as you can see there, the March quarter was a little bit higher this year, and the prior year was already fairly subdued. That large cap we mentioned earlier on, Atomo Diagnostics, raised 30 million. So we only saw 30 million raised from large caps this year, which is really quite dramatically lower than normal. Last year we had well over 600 million that was raised from large caps. So Holly, we'll just move on to the next slide now. This is maybe a little bit hard to read this on your screens, but we've got a version that's a little bit easier to read in the report. And this is really just comparing the number of industries that had IPOs this year compared to 2019, the first 6 months, and it's split by all listings and large caps. Now, as you'd expect, because we've had a lower volume of IPOs, it's unsurprisingly had a very negative impact on the overall spread of IPOs across industries. Only 6 sectors represented there, and in fact only 4 of those 6 actually had more than one listing. So yeah, very, very quiet, certainly compared to 2019, which had 11 sectors, and certainly quieter than we've seen in 2018. Now, out of those sectors, as you can see there, materials and healthcare equipment and services contributed the most IPOs. The materials listing, 2 of those were gold projects. That's against the backdrop of a very high gold price at the moment. The other one being a copper project. And share price-wise, materials floats sort of held up quite well in terms of a share price performance. Was an average gain of 2% there by the end of the year, end of the period, I should say. Healthcare equipment and services. Now, as you can see there, that raised the most money at 42 million, but as we mentioned, Atomo Diagnostics was in that sector, so that contributed heavily to the numbers there. Healthcare equipment did very well from a share price perspective. Atomo itself did quite well, and that certainly helped the numbers there. On average, that sector was up 17% by the end of the year. Outside of those 2 sectors, there's limited things to talk about, unfortunately. The pharmaceuticals, biotech and life sciences had 2 listings. They all ended the year period, I should say, underwater in terms of a share price perspective. Software and services is generally a really big contributor to the numbers. We usually see, along with materials, software and services has quite a lot of listings coming through, but that was very quiet so far at least. But it did have the best performing company of the period. That was a company called COSOL, which I think is involved with software applications for the mining industry. That had a first day gain of 90%, and by the end of the year it was up 198%. Now, unfortunately, that skewed our numbers on share price performance a little bit because it's 1 out of 12, but that one did very well from an individual perspective. Now, we will talk about share price performance overall shortly. It was a little bit of a mixed bag, so we'll come on to talk about it in a future slide. But in the meantime, Holly, if you could move on to subscription rates. Now, quite interesting this. Despite the slowdown in the market, many of the entrants onto ASX this year were successful in meeting their targeted funds. So 75% overall of listings met their subscription targets. That's pretty much similar to what we saw in 19 and 18. And in fact, the sole large cap Atomo we talked about also met its subscription targets. So at first glance, you'd look at that and go, well, look, that looks really positive, doesn't it? But in fact, what we also need to consider is the amount of offers that were withdrawn during the period as well. And there are quite a few, certainly in the second quarter, IPOs that were withdrawn. I think most of the IPOs that happened this year were pretty much done by the end of February. So we only had a few listings in the second quarter and quite a few withdrawn ones. So when you take those into account, things aren't quite as positive as they would sort of seem at first glance. In fact, something else we saw is a big reduction in the average amount of funds sought. Companies were looking to raise only 11.5 million this year. It was roughly 100 million this time last year. Really reflects the composition of the market in the first 6 months as we discussed. Now, there were 3 listings that were unsuccessfully meeting their target. They were small caps, and unsurprisingly, we've seen a bit of a link with subscription rates and post-listing share price performance. So those ones that didn't meet what they were looking for actually had a relatively weak market performance with a first day loss of 10%, and that actually deteriorated to 29% by the end of the period. Now, those companies that did meet the targets, unsurprisingly as well, they had an average first day gain of 29%, which is very respectable, and a period end gain of 30%. Now, one thing that is interesting here is just in relation to underwriting. So we've seen a really substantial reduction in the amount of listings that have been underwritten, with only 17% of offers being underwritten during the period. That was 40% last time, so a bit of a reduction in that, maybe something we can talk about later on. So Holly, we'll just move on now to the next slide. And as promised, we'll just talk briefly about market performance. And we've got two graphics there on the right-hand side of the slide. So I'd like just first of all just to just briefly focus on the All Ordinaries. So we had like a very significant correction that happened during the period with the impact of COVID. So the All Ordinaries, as you can see there on the graph, doesn't quite line up perfectly, but on the 20th of February, just a little bit after that, we reached the market peak for the All Ordinaries around about 7,255. Literally 1 month later, we'd had a fall by over a third to the depth of the market there, which is around about 4,800 or so. Now, we haven't really seen a correction like that since the falls we've seen during the GFC. So very dramatic and precipitous decline there. But fortunately, since that time, the index has rebounded by 24% or so. And in fact, I think we were predicting some falls today, but certainly yesterday we were sitting around about 6,150 or so. So that's all good news in a way, but the translation to the IPO market really hasn't been there, unfortunately. There hasn't been an increase in IPOs, certainly in terms of the near-term pipeline. When we were writing the report, that was certainly at sort of historical lows in terms of the pipeline. Now, just moving to the graphic above there, which just charts the performance of IPOs relative to the wider market. And you can see there that it really seems to have performed quite well from a share price perspective. We had an average gain of 16% at the top there, comparing to the 12% on the wider market. Now, there's a couple of companies that did really well. We've talked about COSOL already. Atomo Diagnostics was up by 70%. And in fact, Intellicare Holdings was another one which was up by 58%. So again, it's at first glance a very positive performance, but as I mentioned earlier on, it was a bit of a mixed bag. So on the one hand, you could say, look, a third of the listings actually had a really strong gain of about 35%. But the alternative perspective is to say, well, look, 7 out of 12 IPOs during the year actually finished the period underwater. So real mixed bag there. So we'll move on now, Holly, to just take a little bit of a look about what's happening going forward. And there have been a few developments in literally the week since we've written the report. The market can move quite quickly at times. So the new listing pipeline at the time we wrote the report was very, very subdued. We only had a single listing, in fact, at the end of June 2020, which was a materials company, Manuka Resources. They were seeking to raise $7 million. By comparison, for June 19, there was 7 companies there, and they were seeking to raise $92 million. And that was already quite a soft year at June 19. Now, the good news is, if there is much good news these days with everything that's going on, but there is a bit of a recovery in the pipeline. You know, the future horizon is a little bit difficult to predict, but at the moment we've got 6 companies and they're seeking a total of $137 million. The bulk of those funds are actually coming from 2 companies. One is 4D Medical. They're a healthcare equipment company seeking to raise 55, and I understand that's pretty much locked away. And also Aroa Biosurgery, it's been in the news as well. They're seeking to raise $45 million, and that's just the ones that are on the books of ASX. We understand there's a few other ones as well. So yeah, very challenging to predict at the moment. Obviously, it's going to be challenging in the short term, but hopefully things will pick up at the end of the year and into 2021. So Holly, if you could move on, please. So final slide. I have talked longer than I said I was going to do, and you've all done very well in terms of hanging in there. So just as key themes we've talked about, COVID-19 obviously had a huge impact on the markets this year. Hopefully things will improve very soon as far as that goes. We've seen a lot of withdrawn listings, and we've just got a lot of uncertainty around at the moment, and that's obviously not a good thing from an investment point of view. Fall in large caps, which has led to a fall in the average funds raised, and also a lack of industry spread. The share price performance a little bit up and down, as we've talked about, and the pipeline quite soft, but hopefully improving.